Good afternoon, everybody, and thank you for joining us on another one of our Start webinars. Thank you, Tim. Tim says he can hear us loud and clear. I appreciate that. We are at 1 o'clock. We have almost 100 people scheduled to get onto the webinar, and so we're still waiting for some people to sign on. So we're going to get started in about 5 minutes, and we're going to ask you all just to stand by, and then we'll get started. So everybody is on listen-only mode, which is GoToWebinar's polite way of saying everybody has been muted. So everyone just kind of stand by, and in about 5 minutes, we're going to get started. We just want to wait for a few more people to sign on. So stand by. Okay, everybody, I think what we'll do is I will slowly get through introductions because we want to make sure we leave enough time for Tony and Dan to give their presentations and leave enough time to get questions answered. So I'm going to go ahead and start and welcome you all to the webinar. My name is Mike Burke. I'm the Executive Director for the Pennsylvania School Bus Association. Joining me on the call is Christina DeLisi, our Member Services Coordinator. And so, again, just want to welcome you onto the call. Couple of quick housekeeping. Most of you have been on these webinars before. Everyone is on mute. We will be taking questions through the question function. So as we move through the webinar, if you have any questions at all, please feel free to type them out. Tony and Dan will be taking questions at the end of the webinar. We will compile them, and at the end they will be leaving time for that. Any questions we don't get to, Tony and Dan and I have agreed I'll forward it over to them. They'll try to get answers to me, and then when we send out our follow-up email to the group with a link to the recording of the webinar and to the handouts, we'll also try to include the answers to the questions. So that being said, I'm going to introduce our webinar, our two presenters. We have Tony Marciano and Dan Vecchio, both from the Duncan Financial Group. Tony joined Duncan Financial in November of 2003, bringing nearly 23 years of accounting, tax, and investment management experience to his role in the accounting and tax services division, as well as an investment advisor representative. Dan started with Duncan Financial Group in October of 1994, and he brings over 25 years of management, accounting experience, and tax experience to his dual role as the company's Chief Operations Officer and the CPA. We welcome them both. We are great. We're really happy they're here. We want to thank the folks at Keystone. This relationship really has come to us with Duncan through our relationship and our partnership at PSBA with our friends at Keystone. So without further hesitation and delay, I'm going to turn this over to both Dan and Tony and welcome them to PSBA. And it's all yours, guys.
Thank you, Mike. On behalf of Duncan Financial Group, we would like to thank all of you for taking the time out of your schedule in this rather chaotic and unprecedented time here of this season of life that we are in order to embark upon our journey with us through this PPP, EIDL, and payroll tax credit opportunities and holidays as provided to us by the federal government. We would also like to extend to you our prayers for all of your families and friends, praying that ultimately you would remain safe during this challenging time. We have a little over 100 employees here at Duncan Financial Group, and all but about a half a dozen are working remotely. We are still very strong and able to perform any and all services as we were able to even before this COVID-19 crisis hit. So we are here for you, and I would ask that if you need any assistance, even if you are working with an accountant or another type of advisor, consultant, please feel free to reach out to us. We are in-house. We are here nearly 7 days a week as a result of tax season being extended until July 15th. So we would like to be a resource for you during this time. Dan and I will be presenting on the 2020 CARES Act and really how it relates to your business. My name is Anthony Marciano, and as a member here at the firm, we are truly thankful for the relationship that we have with your organization as well as that of Keystone. So I guess I'll begin with both good news, bad news, and good news again. The good news is that on the 3rd of April, as most of you are aware, the SBA was beginning to accept applications for not only the Paycheck Protection Program, otherwise known as the PPP loan option, in addition to that of the EIDL program. That was the good news, and Congress had authorized about $349 billion to be promised and allocated to small businesses. Unfortunately, nearly 2 weeks later, the day after the unofficial tax deadline of April 15th, that being Saturday, I believe that was April 16th, what had happened was then Congress had come out and indicated that all of those monies had been allocated, that no new applications will be accepted, nor will any additional SBA lenders be approved. So we went from good news to bad news, and then yesterday we did get a glimpse of good news there. The Senate has passed, and I believe tomorrow the House will then vote. And our hope and prayer is that the House will approve, and then that'll go off to President Trump's desk with the thought there that hopefully by Friday that a new allotment of nearly $300 billion of monies will once again be funded not only for the EIDL, but also the PPP. I believe the allocation right now is about $60 billion is going to be allocated for the EIDL program, and the remaining portion is going to be allocated to the PPP program. Again, though, there is always can be changes, but again, that's the allocation for now. And the good news, too, is that out of the $240 billion allocated to PPP, nearly $60 billion of that is going to be allotted to or awarded to, if you will, smaller community-type banks. Because in our experience, what we had seen was that a number of our clients, they were basically put on a delay or a waiting list, or there was a lag time in responding back to the initial document submission request. And because of that, they were shut out of that initial funding because they had went through a smaller type community or regional type bank. So that should be good news for not only hopefully you, but also as well as our clients. Most of you on the call here this afternoon are likely either approved, meaning you have been approved for the loan and you have been funded, or you've been approved and you're waiting for funding, or alternatively, you're basically awaiting the filing of an application. So you're likely in one of those three statuses right now. You've been approved and already funded, so therefore you're looking to find out how you allocate these monies. You've been approved and you're waiting to be funded, therefore you'd like to find out how you should best go about planning or distributing these monies out over the next 8 weeks. Or you're hoping that by Friday your application will be once again submitted and that you will be allotted those funds here within the timelines that we will provide to you. So under the CARES Act, we have the Paycheck Protection Program. And again, we're going to spend about 30 minutes or so, the bulk of which will be on this PPP program. We're also going to spend some time on the EIDL program. And then the final portion is going to be spent at a very high level, only for a couple of minutes, on the payroll tax holiday and some payroll tax credits. So we're going to keep it relatively at a high level, though we are going to kind of get knee deep into the weeds on some issues. But some areas, unfortunately, are going to be so detailed with calculations that may be an opportunity whereby you might want to go ahead and send a request over to Mike, and then we can follow up with you individually in order to walk through a calculation. But our hope and prayer is that ultimately we're going to add value to you on this. So in terms of who is eligible for the PPP program, your entity, meaning your business, had to have been in existence, in operation, on the 15th of February of this year. You need to be a small business. And what that means is basically per location. So you could have multiple locations and basically file per location, which would ultimately then typically mean you'd have a separate EIN number, but each location would need to have fewer than 500 employees in order for you to file for that specific location for the PPP loan. This is a 100% federally guaranteed loan. And what that means is you as the owner of the business, there is going to be no credit check. There is going to be no collateral required, nor is there going to be any type of a personal guarantee that you ordinarily would be required to have with a conventional commercial loan or even that of a conventional personal loan. So again, all of the backing is basically going to be by the SBA, meaning by this particular government agency. The highlight in terms of how will the SBA and also your bank is going to run through this, through their underwriting process. They're going to go through a preliminary calculation, and even before that, you working with your accountant or your advisor, or you, if you're submitting this on behalf of your business, you should have a general idea of what that potential approved PPP loan amount is going to be. But again, it's going to be generated by you or your accountant, then confirmed by the bank, and then ultimately approved by the SBA. But essentially, we're looking at 250% of your average monthly payroll costs. That's at a high level, and we're going to dive into that. We're going to get into the weeds here a little bit, and I'm now going to turn this over to Dan to talk about really the 75-25% allocation, what payroll means, what other expenses are included. So again, if you're taking notes, feel free to go ahead and jot this down, knowing that we're also going to provide to you a full recording as well as this PowerPoint presentation. But Dan, go ahead and jump over.
Thank you. Good afternoon, everyone. As Tony said, my name is Dan Vecchio, and we're going to get into the detail on the payroll costs. Now, this may seem simple when I discuss it in detail, but there was a lot of communication and discussion back and forth of how do you calculate your average monthly payroll, okay? So first, when you accumulate these numbers, you have a choice. Sometimes it's dependent on the bank. Some banks required certain time periods, other banks were flexible, but typically come down to two periods. You were allowed to look at calendar year 2019 or the trailing 12 months, that being April of 2019 through March 31 of 2020. Those are the two 12-month time periods you had to accumulate this information. Okay, the first number is gross compensation per employee up to $100,000 of compensation. There was a lot of talk about it being your net wages, and then you would add things back. That is not the case. It's gross compensation before any other deductions up to $100K per employee. So if somebody was basically making $150,000 a year, we can only include $100,000 of those wages in our calculation. The second piece of that is any company paid required provision of the group health care benefit, including health insurance premiums, okay? Now, this is the company's portion of that. Because as you well know, most companies make the employees, whether it's on a pre-tax or post-tax basis, make the employees pay some of that. You have to deduct that off of your number. It can only be the company-paid portion of group health care benefits. One of the questions we have been getting from our clients, what if I have an HSA account for my employees that I fund some of that as a company? That is a provision in your plan. You would be able to add that cost. Not what the employee withholds from his pay, but what the company would pay. Okay? Third, any type of retirement benefit. What I mean by that is if you have a 401k plan and you're doing some type of matching contribution, you can include that cost. In addition to that, if you have a safe harbor 401k plan, you can include that. Now, the gray area is any type of elective deferrals. That is if you would make some type of profit sharing contribution. Our understanding is that cannot be included in this number because that is elective. That's not required like your matches, okay? The next thing is state and local taxes. Basically, here in Pennsylvania, that's only basically going to include two taxes that we know of. One, the Pennsylvania unemployment compensation tax that's paid by the company, not what's withheld by the employee, but what's paid by the company. And also, if you're located or pay wages here in the city of Pittsburgh, the city of Pittsburgh charges the company what's called a payroll tax expense. They charge you a small percentage on the gross wages. That could be included in order to come up with our compensation number. We get that for the year, divide it by 12, take that times 2.5 times in order to get our loan amount. Now, if an employee is up over $100,000, as I said before, there's a $100,000 limit. That is just compensation. So, once again, you can only include $100,000 of his compensation, but if you're also paying a retirement plan match or you're paying some of his group health insurance, you can add that over and above the $100,000. Okay? What's not included? What's not included is the company's portion of the Social Security and Medicare match. That does not get included. Then also, if you have any employees whose primary residence is outside of the USA, which we probably don't, that does not get included. Okay? Now, in addition to that, as far as loan forgiveness goes, the SBA has come out and said that 75% of your loan proceeds, at least 75%, needs to go to these compensation costs that I just discussed. The other 25% can go to other expenses, okay? Now, what are the other expenses? First, it's rent expense. In order to qualify, you have had to have a lease agreement in place on February 15th of 2020 for that rent payment to be included. In addition, even if you're paying a related party, because a lot of times the owners of the company buy a building and put it in a partnership, if you will, and then lease it back to the company. Even if it's a related party lease, it doesn't matter. You can still include that cost, but you have to have a lease agreement, okay? In addition to that, you can deduct utilities. Here are the utilities that are included: electric, gas, water and sewage, telephone. That would be office phones as well as mobile phones, and the internet fees. So those are the utilities. In addition to that, if you do not pay rent and you own the building that you operate in and you have a mortgage on that building, the interest that you pay on that mortgage goes into those costs, okay? Now, there's one catch to this in regards to interest on other debt obligations. In the money of how the loan proceeds can be used, it says you can pay interest on other debt obligations. But when it goes to the forgiveness section, it is silent as to whether the interest that you pay on other debt obligations can be included for forgiveness. So that we need more direction on at this point. And now I'll turn it back over to Tony.
Unfortunately for not only you, but also us as accountants, we don't like gray areas. Gray from the perspective of how do we attack something? How do we plan for something? How do we prepare for something in the event that something goes wrong? And unfortunately, based upon how these regulations were written in this nearly 900-page document, there are some gray areas. So the bad news is there's going to be some things that you don't know, that we don't know, that the bank doesn't know, and that the SBA does know. However, they have not yet provided clarification on. And based upon what we are hearing and reading is that by the 15th of May, we should have some additional clarification on some of these items that Dan has brought up and that I will be bringing up here related to some of these calculations. But the answer for now for some of these questions is really going to be, we don't know. Here's what we think. Here's our best educated, intelligent guess, but we don't know for sure. So what does the bank want in terms of submitting this application, and what are they going to look for, and what do you need to begin to look for and to gather up for purposes of seeing what type of PPP loan amount you might be eligible for? If you are a self-employed individual, you are a sole proprietor, or you are a single member LLC that is taxed as a disregarded entity, meaning you only file a Schedule C with your 1040, with your tax return. You have no separate state tax return filing for your business. Then what you will do is, if you have already prepared your 2018 return, but you have not yet prepared your 2019 tax return, then you want to forward to the bank your 2018 tax return. Because as a Schedule C, a sole proprietor, a single member LLC, an independent contractor, as a Schedule C filer, the only thing that we are being told that the banks are looking at, and we can confirm this based upon the acceptance that we have already had, the approval and funding of these entities, is that they are only looking at the tax return, and it'll be the most recent return filed. So if you've already filed your 18, great, they're going to look at that. If you have already filed your 19, great, they're going to look at that. If you have not filed your 19, but you've only filed your 18, they're going to go based upon your 2018 tax return. Next, for a partnership, okay, 2 or more partners. In a partnership, what they're going to look at is they're only going to look at the guaranteed payments. So if you recall, partners in a true partnership, be a general partnership or an LLC, for example, in a true partnership, the partners in a partnership are not permitted to be on payroll, meaning they cannot take a paycheck and therefore have payroll taxes deducted. So because of that, what they're going to look at is going to be the deduction for any type of guaranteed payments. Guaranteed payments are basically going to be payments that are made to the partners in a partnership for normal, routine, day-to-day services that you render for the business. And on your tax return, for example, same thing. You filed 2018 but not 19, you're going to submit 18. You filed 18 and 19, you're going to submit 19. There's a line on your Form 1065 partnership return that is marked guaranteed payments. They're going to add that number. And why is that important? Because guaranteed payments is really treated as compensation to you as the partners, and that money is subject to basically payroll taxes, which in effect is referred to as self-employment taxes. So your guaranteed payments are going to go into that PPP number. In addition to that, what you're also going to add in is going to be your ordinary income that is subject to self-employment tax. So also on your tax return, your Form 1065, if you or your accountant is preparing that return and your business for either 18 or 19, depending upon the most recent year that was filed, assuming that that business has showed a profit and that profit is being subject to self-employment tax, meaning it goes into the self-employed earnings calculation that you would see on the Schedule K, the K1 of your 1065, then that too would get added into the guaranteed payments. So again, real quick, sole proprietors is going to be Schedule C. Partnerships is going to be 1065. Now, S Corps and C Corps, all that they are going to look at is going to be payroll. No draws, no dividends, no distributions. Same thing with the partnerships. No draws, no dividends, no distributions. Only guaranteed payments and SE profit. Corporations, S corporations, your typical Incs, your C Corps, they're only going to look at payroll costs. They're not going to look at draws, dividends, or what's referred to as distributions.
Now, real quick, both of those numbers are limited to the 100,000, whether the Schedule C or the partnership. Once again, 100,000. Go ahead.
The application process. Now, the application process here, as many of you know that have gone through this, but this might be a to submit an application. You are going to submit this directly to your bank. Now, your bank needs to be approved SBA lender, but your bank is really just acting as the middleman, if you will, and they're still per se going to do their underwriting. They're going to go ahead and collect the documentation, run through what your calculations were on the Paycheck Protection Program application. They're going to then get back to you with any additional questions and or documentation requests that they need, and then they will then submit that directly to the SBA. For the PPP loan, you cannot apply directly to the SBA via the website. This all has to go through your bank. They will submit that information. Now, what have we seen in the way of typical turnaround times from submission of application to funding? Again, for those that we submitted on April 3rd, the earliest that we saw funding was April 13th. So that was 10 calendar days. April 3rd, we submitted the information to the bank. Now, again, we don't know when the application actually went from the bank to the SBA, but we received an actual funding notice, if you will, on or about the 10th. They then received, if you will, the client, you, the business, the forms to sign as receiving this loan, and then the loan was then funded on the 13th. So 10 calendar days. Now, that being said, I will also tell you we submitted some on the 3rd, and we have yet to hear back at all from the banks. So again, it's hit or miss, dependent upon the bank. But what I will tell you is you as the business owner must, because these banks are swamped and overwhelmed with applications, you must be diligent in following up with them. That is very, very important. Dan?
Hey, Tony and Dan, if I could interrupt one quick second. Yeah. Are you advancing any slides, or are you staying on the same slide?
Yeah,
okay.
Well, we're going to be on the same slide. We're going to be moving.
Okay, good.
Yep.
I just had a question. Good enough. Good enough. Sounds good. Thanks, guys.
Sure. Yep. Okay, real quick, I just want to go over the repayment terms here. If by chance part of your loan is not forgiven for various reasons, the interest rate on this loan is going to be 1%. There's going to be a deferral period for the first 6 months. So for the first 6 months, no payments of any kind, principal or interest. By the end of that 6 months, you're going to know how much of that loan is forgiven, how much of it is not. The balance of that then that is not forgiven is going to have to be repaid over the following 18 months at 1% interest, penalty and interest, principal and interest included. So if by chance you have to repay some of this, you cannot get a loan out there for 1%. So it's not too awfully bad if you got to return some of this money is what I'm going to say. Okay? Now, talk quickly on the taxability and deductibility of this. One is easy, one is a little harder. If you receive the PPP loan and it is forgiven, that forgiveness of income will not be taxable. It will be excluded from taxable income, which is a good thing. And because typically any type of debt forgiveness you have to treat as income. It's not going to be income. Now, what about the expenses that we pay with this with this forgivable part of the loan? Are those expenses going to be deductible? And the answer is maybe. This is one of those areas that more guidance is needed, because if you think about it, you're almost double dipping, if you will. You are double dipping if I get $50,000 loan, all of which is forgiven, that I don't have to take into income. Then I take that $50,000, pay payroll with it, and I get a $50,000 deduction. That, in essence, is double dipping, not recognizing the income and taking the expenses. And right now, in Code Section 265, the IRS says any expenses allocable to tax-exempt income is not deductible. But our feeling is Congress wants to be generous with this and help out companies. So our feeling is they are going to amend that section, probably just for this year, to say that that is not going to be the case. Those deductions are going to be deductible. I'll turn it back over to Tony to talk a little bit about forgiveness.
We want to run through the forgivable feature. You know, the challenge is basically that the SBA is essentially by giving this money out to you, they're essentially recommending that you pay employees not to work. Because so many of our clients and many of you, basically you're in a position right now where there's no transportation needed. Very few, if you will, of our restaurants are in a position right now where they can bring back all of their employees. Car dealerships, in order to sell vehicles, they are essentially not open within Pennsylvania. Car service repair facilities are. So what you're seeing is the SBA is essentially handing you this money and giving you an 8-week time period in order to spend this money. However, the money that you provide or would provide to your employees, you better hope that that is over and above what they're receiving in the way of unemployment compensation, or the employees are not required. So that is the challenge that we're up against. So the SBA recently clarified that the covered period, and that period begins the day that the funding hits your bank account. You have 8 weeks, a little under 2 months. You have 8 weeks in order to spend that money. That's the covered period. Now, if a business reduces employees from February 15th through April 27th of this year, but eliminates that reduction by June 30th of this year, the reduced forgiveness is restored. Now, a quick example or a quick calculation. Let's assume that over this covered 8-week period, so let's assume that we get our funding today. We now have 8 weeks to spend this money. Remember, at least 75% has to be in the way of payroll. We get this money today. Over the next 8 weeks, we have brought back, if you will, 24 employees. What then the bank will look at in order to determine the portion that is forgivable is they will want you to look back to 2 periods, and you have the choice to pick one of these 2 periods. One, you can look at the period of February 15th of 2019 through June 30th of 2019, or you can look at the period of January 1 of 2020 and ending on or through February 29th of 2020. Let's assume that you pick one of those 2 periods
and on payroll at that time were 30 people. You now have 24 in the covered period, but your look-back period had 30. That means you fulfilled 80%, if you will, of that requirement. So what that means is all the monies that you received from the PPP loan that you have attributed to payroll, only 80% of that number is going to be forgiven, is going to be forgivable. That is very, very difficult. So we are looking for further clarification to see if it's possible that the SBA may extend that 8-week period, being that here in the state of Pennsylvania here under Governor Wolf, he isn't even essentially allowing your non-essential businesses to open at the earliest, be that May 8th. So we're looking for a possible extension here. But as of now, you have 8 weeks. 8 weeks. And what is a full-time equivalent employee? Good question. Gray area. 2 answers. Because we've had clients that have been accepted treating a full-time equivalent employee as one who works an average of 30 hours a week. And we have had applications accepted whereby a full-time equivalent has been treated as an employee who averages 40 hours a week. So what we would say is to treat both equally, meaning this covered period, this covered 8-week period. If you're going to use 30 hours a week, then you better use 30 hours a week in your probationary period or your look-back period, that period being in early 2019 or early 2020. If you use 40 in the covered period, you need to use 40 in the look-back period. The default is 40. However, it's gray because based upon the SBA website, for purposes of the Affordable Care Act and whatnot, they treat a full-time equivalent as 30. So we're having applications accepted by both. We have about another 5 minutes at the most left in total in our presentation, so we're going to kind of pick it up here.
Okay, thank you. As far as tracking of expenses, remember at the end of this 8 weeks, we're going to have to submit this information to our bank. So you're going to want to keep detailed payroll reports for the next 8 weeks that list each employee, hours worked, okay? In addition to that, all those expenses I talked about, health insurance, utility bills, rent payments, I would either earmark them in your general ledger or start a spreadsheet to keep track of these costs that you're accumulating, but also make copies or scan copies of these invoices, because we are sure at the end of these 6 weeks, you're going to have to get your 8 weeks, you're going to have to get your invoices for these and submit them to the bank. So you don't want to be waiting for the full 8 weeks to get this. Start accumulating those things now. In addition to that, make sure you have that lease agreement and it is up to date, effective as of February 15th, because they are definitely going to want a copy of that. If you have any questions as to what your bank is going to need, I would be proactive to reach out to them now so that you know what you need to start accumulating. So I would either keep it in some type of spreadsheets of all these costs with scanned copies of the invoices that you can give to them. Okay? Tony's going to talk about the EIDL real quick.
The EIDL is more reminiscent of that of your traditional commercial loan, as whereby the majority, if not all, of the PPP loan, if you will, can become a forgivable grant. Only up to $10,000 of the EIDL loan can be forgivable in the way of a grant. So therefore, with the EIDL option, that too, like the PPP, has dried up. So there's no new applications. But again, as I mentioned, that'll be included in the next round of funding here, hopefully that we hear by Friday. But with the EIDL loan there, the major differences are you needed to have been in operation
as of the end of January of 2020, you could submit this application directly on the SBA.gov website as soon as they begin to accept applications. And then you can then check a box. Do you want to have this EIDL $10,000 grant provided to you? And you will receive this grant, the SBA is claiming, within 3 days of an approved application, and that you get to keep that money even if your actual EIDL loan is not approved. With the EIDL loan, remember, it is going to be a credit check. There will likely be collateral, though I believe for a for-profit entity, for any loan under $200,000, there is no collateral or personal guarantee that's going to be required, and there are higher interest rates associated with this. Unlike the 1% with the PPP, for a for-profit entity, that's a 3.75% loan, and there are no payments that are due until the early part of 2021. So there's a deferment or a forbearance period until early 2021, and the repayment period is up to 30 years. However, the length of that is going to be based upon the financial condition of your business as determined by the SBA.
Okay, 2 credits. First of all, if you're approved and you get a PPP loan, you are not eligible for either of these 2 credits. The first one, the employee retention credit. If your business was affected by COVID-19 and you're closed up, or your revenues have decreased by more than 50% over the same quarter of last year, you're eligible for an employee retention credit. That is 50% of the wages that you pay to an employee up to $10,000. That includes health insurance benefits up to $10,000. You get a 50% credit. So in the second quarter, if I pay somebody $7,000, I get a credit for $3,500 on my 941. So when I go to file my 941, I paid all my payroll taxes. I'll get that credit. The IRS will send me a refund check. This is going to be looked at on a quarterly basis. The trigger here is 100 employees. If you have more than 100 employees, you only get credit for compensation paid to employees to stay home and not work. If you're under 100 employees, you get it for anybody and everybody, okay? The second one, very easy, employer payroll tax holiday. You can take the company share of the Social Security and Medicare for the second and third and fourth quarters of this year that you would have to pay and not pay it. You accumulate that. At the end of the year, you have the total of the employer share of the Social Security and Medicare. You then have to pay that amount in 2 payments, one at the end of 2021, one at the end of 2022. That is it. Once again, not eligible if you get the PPP loan. And Mike, we're going to turn it back to you for questions.
Wow. That is a lot. All right. Well, we do have questions, and we're going to go ahead and start tackling these questions. And so we'll start with the first one I've got. So say you receive a PPP loan on April 17th. Are you allowed to go back and cover 2 payroll periods since you were closed, or do you have to start with the payroll from the time you received the funds?
Yes. Good question. The period is the day that you receive the funds, looking 8 weeks forward. The expenses have to be incurred and paid in that period. You cannot go backwards.
Okay. Under utilities, would fuel for company vehicles be included in transportation?
No, that would not be. The only other expense that we have seen be approved is security monitoring, like that of a security system. So if you have security monitoring, for example, on your buses or on your building, that has been approved as a utility. But no, fuel for your buses or your work vehicles, that would not be an approved utility.
Okay. Is trash collection a utility?
I would say yes.
Okay. Okay. Are expenses, quote, when paid or...
Again,
oh, go ahead.
Go ahead, Mike. Yeah, just to
No,
confirm, again, we're having, in some of these, we're having to make an educated guess only because there's some definitive things we know, but we almost have to make a realistic guess based upon how we feel that the law was written in terms of what type of clarification is going to come forward. So a trash collection, for example, in our eyes, being that we deduct this under a utility expense and under audit for an individual or a business tax return that is deducted trash as a utility, that's been approved. So based upon that assumption, we're assuming that that would also be part of that forgiven amount.
Okay. Is workers' compensation insurance considered a payroll expense?
No, it is not. Only those ones that I gave you.
Okay. I got a question here. I'm hoping I get this right. Are expenses, I guess, what are expenses when paid or incurred? Unemployment compensation tax would be an example of a huge difference. The first quarter would be paid during my 8-week window and is much larger than what would be incurred during the same period. I'm not sure I may have to have that person send me a much larger email, a little more in-depth email on that one, if they could. Let me go on here. Unfortunately, I missed the first part where they talked about 75% that is forgivable. What was that covering?
That's payroll cost. So if I would get a $100,000 loan, 75%, at least 75% has to be included in those payroll costs that I gave. Payroll, group health, retirement plans, UC would have to be used for those specific payroll costs.
Okay. My 8 weeks will run out on June 19th. After that period, school bus drivers will be on summer break. Can I lay off employees, or do I have to wait until after June 30th? This is important because this is how I would calculate the full-time equivalent employees.
No, because if they're working, you could lay them off after that 8-week period. I think you're fine. The calculation would be over.
Okay. Does payroll and qualified expenses must be paid, or does accrued wages and expenses, is that acceptable?
Yeah, that right now is gray. Is it they looking at just paid expenses, or are they looking at accrued expenses, or both?
Okay.
And that I think is a little bit gray right now. I will tell you that I think they're going to frown upon, accruing things early or prepaying things 2 or 3 months out. I don't think they're going to allow that. So unfortunately, I can't give you an exact answer of accrued or paid.
Gotcha. Bus drivers are part-time, so how is that going to work with the forgivable aspect of this?
I think that's going to go based on hours and calculating your full-time equivalent. For instance, if I run my payroll, and let's say I have 20 people, and I take a look at the total hours that those 20 people worked. I take those total hours divided by whatever my work week, let's say, is 40 hours, is a full-time equivalent. Total hours divided by the 40, that would give me my quote-unquote full-time equivalents for that pay period.
Okay. When calculating full FTEs, can the full pay period, and you may have answered this, can the full pay period that the start date and end date be used when calculating FTEs? Is always difficult when I'm doing this. Can the full pay period that the start date and end date be used for what would be, I guess, the start date and end date for calculating? January 1, 2020 is a Wednesday and will fall mid-pay period. My payroll company runs reports by pay period only. I'm not sure.
I think he's asking in that period to decipher how many full-time equivalents he had in that one pay period. I would take it typically, if you're paying every other week, and we got 8 weeks, I would include at least 4 pays is what I would tell you. Tell him, would you agree with that?
Agree with that? Right. He's utilizing, if you will, he would be utilizing, remember, the one of two options. He would have the January 1 of 2020 ending on February 29th of 2020, or he could use February 15th of 19 through the end of June of 19 there. So yeah, I would basically, if you're paying every week, I would kind of pull in, if you will, 8 pays. Mm-hmm. If you're paying every other week, I would make sure that you're going to kind of drill down into that 4 pay period, hopefully over that 8 weeks. Because remember, you're going to want to use, like I said, your base period and your covered period. You're going to want to make sure that you use the same hour requirement, either 30 hours as a full-time equivalent or 40. The default is 40, though we're thinking that the SBA is going to also approve the use of 30. But in that case, being that they only run a payroll report and the pay date, for example, may have been on, January 9th, but the pay period would have ended, for example, on January 4th, for example, that would have been perfectly fine. We just want to make sure that we can kind of use, if you will, 4 pay periods within that 8-week pay period, and it might go a couple of days before or after, depending upon when you pay. Go ahead.
And Mike, I just want to make a general comment here. I think, as Tony said, we're going to get a little clarification from the SBA. And what it comes down to, I think, if you kind of wait and we have some concerns or questions about these things, by the middle of May, I think you reach out to your bank. Because remember, the bank where you got your loan and their underwriting department, they're going to be the gatekeepers here to decipher what is forgivable and what is not. So at that point, I would reach out to the bank and say, I'm getting this together. Can you give me some clarification? Because ultimately, I think that's who's going to make this determination. And just food for thought there.
And the good news there, like I said, based upon when the initial application were submitted on the 3rd, likely not getting approved until the 13th, kind of 4 to 5 weeks out puts us in that mid-May time period where we should have some clarification on that. So from that point on, yeah, we'd be happy to, where we could forward information directly to you, Mike, and then you can basically send that out to everyone on the call to give them an update, and they'll still have another 3 to 4 weeks, if you will, before they have to go through that calculation of how much is forgivable and not forgivable with the bank. So we should have some definitive clarification by that. Go ahead.
Excellent. Very good. All right. Along those lines, if the PPP is all used for payroll, will it be forgiven 100%?
Yes. The stipulation is at least 75%. So
absolutely.
Yeah,
okay.
That's good.
This goes toward, acceptable expenses. We have electronic logging devices, GPS, Wi-Fi on buses, phones, internet, and driver communications. Are any of those covered as acceptable expenses?
Yeah, that's going to be difficult because, and again, I would deem that to be communications, if you will, almost like that of telephone expense.
Yeah.
And in telephone and internet is a permitted deduction there. So we might be getting a little bit knee deep into the weeds. Unfortunately, like many things within this 880-page regulation bill there's no definitive explanation of that. So I think it's reasonable to include that. But again, the hope is that come mid-May, we have some additional explanation and detail on that. But at first hunch, our thought would be, yes, that would be included. Yep.
Thank you. By the way, you all didn't realize that the host here his call got dropped by GoToWebinar. But thank you for answering that. Are bonuses a forgivable expense? I guess that's another thing you're going to want to wait and get some clarification on.
Bonuses? Yeah. I think our understanding of that right now is if you would increase somebody's pay up by 25%, that is still allowable. So I would say bonuses can be included, yes.
Okay, so along those lines, can you use the PPP?
Go ahead, Mike. I just wanted to give it a quick example there. So if you're paying somebody, if you will, $10 an hour, you can basically give them a bonus and start paying them $12.50 an hour for that covered 8-week period, if you will, and that would still be permitted. Yep.
Okay. So along those lines, can you use the PPP as driver retention standby wages when employees are not working because school is closed?
Yeah, as long as you pay them, absolutely.
Okay.
And that was really the point. That was really the point of the SBA is they wanted to basically relieve the federal government and the state system, if you will, from having to pay out on unemployment compensation.
Yeah.
So based upon the way that the law was written, they're encouraging the payment of people to not work. So absolutely. Yep.
Okay. Will school bus drivers be considered full-time employees? Oh, no, okay. Question was, will they be considered full-time employees? I think you covered that.
Yeah, it's an equivalent. Yep.
Yeah. What kind of a document would be needed as proof?
Proof of what?
Yeah, I need to get, if that person could send me what they're specifically looking for.
If you're looking for proof of, if you're looking for proof of payments, now again, if they're paid per day, if they're paid hourly, that information, for sure, if they're paid hourly would be available on the payroll report. And just like the tax returns that you would be submitting to the bank, you also need to submit copies of quarterly payroll reports, monthly payroll summaries. So again, the proof would likely be via those per pay or monthly payroll summaries that would be available to you via a Paycheck or an ADP or a QuickBooks payroll report. That would be sufficient documentation.
That's what it was. It was what kind of proof of payroll. That's what it was.
Yeah.
So
because remember, that's what you submitted to get the loan. Yep.
Got it. If your PPP was dropped into a checking account, is it okay to move the money to a savings account until you make the payroll distribution, rent, or utility payment?
Absolutely. You can do whatever you want with that money. Absolutely. Okay. AKA right now, some of our clients, real quick, they're getting this money in the checking account. If they have a line of credit that's the money's out, they're paying down the line of credit with it, and then they'll just take it off the line of credit as they need it. You can do whatever you want with it.
Okay. I got a clarification earlier question. We were talking about unemployment compensation. Clarification, the first quarter unemployment compensation tax is paid on April 30th. Can we use that number, or does the unemployment compensation deduction have to be on the wages incurred during the 8 weeks?
Yeah, we believe it's on the 8 weeks. Because remember, that's on a per pay basis. And I know that kind of stinks here in Pennsylvania because some people make over that $10,000. You're really paying that in the first 2 or 3 months of the year. So.
Gotcha.
Yeah.
Is the loan application based on the, is the loan application based on the employees at the time of application? So many are laid off now that some of us might have more than 500 before the application, but not at the time of the application.
When you say 500 as far as being considered a small business? Like
I
less
assume
than 500
so, yes.
Employees? Yeah.
So I think what you're saying is
the number of employees you have when you fill out the application, right?
Yep.
Mm-hmm.
We have not been approved yet. So when we do get approved, may be close to when drivers would have to be laid off for the end of school. Therefore, can we pay drivers as a requirement to return in the fall?
Yes, but you just have to pay them within that next 8 weeks.
Okay. Excellent. The other question I got, how soon will this be available via playback? Usually within 24 hours, we get an email out to everybody. That is all the questions that we have. We are going to have this presentation also, and I believe the contact information for Dan and Tony are on this present. There they are, and even with their smiling faces. And that'll have so you can guys forward that over to them. Gentlemen, thank you so much. This is, I know, not an easy topic. It's evolving constantly. We really do appreciate you giving your time and taking your time to do this with us. And again, we do want to thank. I got one more. Can you guys squeeze one more in? I got one more.
Sure.
One more. If employees were laid off and are called back by June 30th, 2020, do we have to meet the FTE requirement for the 8-week period?
I think I think they're going to include that they are on there. So that would go towards ramping up your thing to meet the numbers of people. So, but remember, it's still a two-prong approach. One, you got to spend the money. Two, you got to keep that same level of employees. So by doing that, yeah, you may meet the number of full-time equivalents, bringing them back by June 30th, yes, but if you haven't paid them, you may not meet the numbers perspective of using at least 75%. So it's a little bit of a two-prong approach.
And I did miss one along the way with apologies. What if we do not hit 75%, but maybe only reach 50%? How much, if any, is forgiven?
Okay, so if we're saying we reach 50% of the total loan to payroll versus the 75, that would be reach 2/3. So 1/3 of the 75% would not be forgiven. Then the other 25, as long as we used on those others, that would be forgiven. So once again, two-prong approach. 75% payroll, 25% for the other.
So in that example, if they've met 50% of the 75% of the payroll, and they've also met 25% of the items outside of payroll, then essentially all but that 1/3 would be forgiven. The 1/3 that would not be forgiven would then need to be based upon those repayment terms of 2 years, no payments for 6 months, interest would accrue at 1%. So the majority of that would still be forgivable.
Simply put, $100,000 loan, 75 payroll, 25 to the other. We matched the 25 to the other. Of the 75, 2/3 would be forgiven. So 25,000 of that loan would have to be paid back.
Excellent. All right. Gentlemen, thank you so much. And again, if anyone has any other questions, you will see their both Tony and Dan's information is there. I encourage you. I'm sorry we couldn't get to everybody's. We'll forward the remaining questions that we're getting over to them. And again, we thank you guys for giving your time. We thank Keystone for connecting us with Duncan Financial. And everybody, again, we wish you good luck. Stay well, stay healthy, keep in touch if there's anything that PSBA can do for you all. And we'll be keeping you informed of upcoming webinars that are, we have a number of them scheduled for the next couple of months. So again, thanks, Dan. Thanks, Tony.
Thank you,
absolutely. Mike. And everybody keep in touch. Stay well. Thanks. Bye-bye.
Thank you. Bye-bye now.